Hey everybody, this is John and welcome to the free video. So fantastic rally today, a lot of fun, but just keep in mind that where we are in relation to where we have been. At this point, I am looking for a move back up to the 21 EMA. That does mean that we have some fantastic upside in place, but we're not looking for a V-shaped bottom here. Typically what happens on something like this is you get a W bottom. Okay, so what do I mean by a W bottom? Well, if we look at the S&Ps here or the NASDAQ on a weekly chart, just go back to February. This is how this always works. Now this is granted a weird W. So, boom, 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 boom. The NASDAQ was a little bit more pronounced when this happened. You can, clearly see it there. So this is wrong tool. So this is how corrections always kind of shape up. V-shaped bottom are for trends. You come down, you bounce. Corrections are W's, and this is more all the psychological stuff. So think of it like this. And from here, so I think we get something like this. That's kind of a no-brainer. From here, it's anybody's guess if then we make new highs or we need to take a break, and that'll all depend which way the weekly squeeze fires. Okay, so that's obviously going to be pretty important. And you can pick a stock or any stock here, and it's mimicking what's happening. Amazon, of course, fantastic rally today, 86 points. But when we look at it in the context of from where it's come from, this is just a rally back up to its 21, which is now trailing the price to the downside versus trailing it to the upside. And then for tomorrow, obviously Netflix today had great earnings, up $55 after hours. If we look at the NASDAQ here, NASDAQ's not really responding. It's down 12 points right now. It's about 5 o'clock Central. However, that could kind of pick up in the morning. I do think that even if we get some initial weakness in the morning, we still need to get back to that 21 EMA on the weekly on the dailies. That would take us to about 73.80. So that's like 40 points from where we are. Keep in mind, that is not very far from where we are right now. And if you're long and we get into those levels, be careful. So here's some kind of things like that what I'm using to kind of time this stuff in this kind of a market. All right, so here's a few examples of some trades that we did today using these levels. And the whole idea of this is that so this side is based on swing trades that last a couple weeks to a couple months, and then this side is based on trades that last a couple hours to a couple of days. And you can actually do, if you want to, a couple minutes to a couple hours, you can actually change it up a little bit more than that. So what we're looking on this is using, of course, the 30-minute and the 2-hour pivots for entries on the lower time frame with the idea that we can then pop up into the upper time frame. So we did pick up that one today. That one was pretty simple, pretty clean trade. And we talked about all the tools that we're using in the current class that I'm doing. On this particular one, we've got a 4-hour squeeze that's set up. So here's the 4-hour squeeze here. And then, of course, we have all those levels on ENDP. You can also see, too, that it's very honey badger-esque. As the market was really selling off last week, the stock really didn't care. So we're continuing to look for the stock to climb higher. And then one trade we tried to pick up today was calls on CGC. Of course, that's the pot stock. Now, here's the first rule. This is why if you guys ever have trouble chasing something and then it just kicks you in the face, these tools have been extremely helpful for that. So it started off gapping into the 4-day upper here. Never ever buy that. Okay, what do? You go back over here, wait for a pullback to the 2-hour pivot. So we placed our order there. We got close. We didn't quite get it. So we're going to continue bidding there for tomorrow. This saves you so much pain and suffering. Now, a classic day trade that I like, this typically lasts a couple hours, is exactly what's happening right here. Now, on the daily chart, you can see Home Depot finally found some support here, is really having a tough time. But from this level right here, we are just banging back and forth between 30-minute upper, 30-minute lower. So today we came down. We not only got a test of 30-minute lower, but that's the thrust and reaction indicator, but we also got a buy signal from the ebb and flow indicator. So we simply bought this with the idea that we could rally up to the 30-minute upper. So we picked up our options. It was around $3.50. Turned around. We placed our order for $4.70 to get out. About 90 minutes later, we got really close to our target. I think our target was 470. Here we are at $4.62. Up about 975 bucks on a 10 lot. And you can see right here, we are creeping right up into our target, right at that 30-minute upper. Just grind, 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 grind. And then, of course, we just kept grinding. We finally hit our target. It took a little over 90 minutes, but it was a great example of just what I call an income trade in any kind of environment where you're specifically looking for that to take place. You set it up, very non-emotional, very specific set of rules to follow. And what's interesting, if you look, here, it's like, oh gosh, Home Depot is a disaster here. That's okay. We had a setup for a quick move on the long side, knocked it out, cashed in our chips, and moved on. So I talked about ePay earlier, and we had a lot of discussion on this one. And so the question is, how do you get a runaway stock? The beauty of these levels is what they do is they scream at you when you don't want to chase, okay? And now, look, ePay may keep on going higher tomorrow, but when we get into a situation like this, when we hit all three of these uppers and we get something like this, which is a rare, rare signal, if you're buying here, most of the time you're just throwing money away. Instead, all you got to do is wait for this trailing 30-minute pivot. That's your safe entry. And guess what? When you get a move like this, typically the algos test the weekends the next morning to see if they can shake them out. That's where you want to scoop it up. Okay, it's one of my favorite setups. All right, so what is this? We are in the middle of the class that I'm currently doing right now. Okay, we've already done some of this. So we already did this. We already did the quick start, which is that one. We already did the 4-hour Saturday class, and now we're on day 1 of the 3 live trading days. Now, so far in day 1, we've already paid for the class. All right, so we got 2 more days that we'll be doing this. Now, the key thing with this is we are learning how to use the multi-range indicator and multi-snap. Okay, as I talked about in the Saturday class, multi-snap is for bringing precise timing into the idea of the bigger thrust reaction moves, and then the multi-range is for catching the ebb and flows. It's been a great combination. It makes this a lot easier, a lot less stressful. If you would still like to be able to participate in this, get these tools, okay? You can get the recording for the quick start guide, get the recording for the 4-hour Saturday class, the recording for the first day of live trading, but still participate in the next 2 days. Everybody, this is one of those things where this is not a complicated. The Saturday class I did was the strangest one I've ever done because all we did was spend 4 hours talking about kind of the idea and the theory behind these tools, and it took about halfway through the class before it was like aha moments exploded all over the place, which was really cool. And now we're simply utilizing them in a live environment. So anyway, it's been a lot of fun. So far, so good. Still not too late to grab these if you want. You've probably seen everybody talking about them in the room. And especially tomorrow with FOMC minutes and what's going on Thursday, it's not only the perfect week, like something like this when it's really volatile, but believe it or not, these are even better when the market's quiet down. And then you can actually sit these up, whether you're, trading full time or if you're working full time and trying to do it part time. It's just a way to naturally catch the ebbs and flows of the market and just base hit after base hit after base hit. Anyway, good stuff. It's a lot of fun. And there you go. Have a good night.